Good evening, TheoTrade. This is Corey Rosenblumen. You're watching the Theo Nightly video for the 21st of April, 2020. We are talking a down day in the market with the Nasdaq down 3%, S&P off 2.5%, and the other indices, Dow and the Russell, down just about 2%. I think the big thing today in the news world, and of course the trading world, as you may have seen Don do live in a midday update, was crude oil. So we'll start talking about the SPX, which is the SP500, which is trading down from 2,900 and is back within our 50-day moving averages. And the thought process is that this bounce may be done. We'll take a look at that in some other components, focus on oil, and then in the presentation tonight, the video tonight, with looking at stocks that have reported earnings. Now, starting with the S&P. On the S&P, what we're going to see over on the right side of the chart is a 1 minute that takes into account the after hours market. That's going to come into play here with the earnings in a moment. But for now, taking a look at the S&P, on the daily chart, we have a pivot down away from our midpoint. And we can look at that from the hourly chart. That we have a dominant thesis sell swing. And that is against 2850 for the intraday traders, with the potential to play even lower than that. 2600. And we start breaking 2600, it's going to open up the floor to a downside activity. On the 4-hour chart, you may be able to see, this is just kind of doubling the daily chart, where the market might head toward. So these are the downside pathways, but as intraday or short-term traders, butterfly, vertical spreads, in-out spreads on the SP futures or the SPY, we can take a look at Don's gravity spots. Those are helpful for intraday traders. There's a whole section on the TheoTrade member page for gravity spots. Those can be done with butterflies, targets for intraday traders, reversal points for intraday traders, and points to put on short-term trades. Now, we're looking at this perspective from, we'll take a look with the SPY first to prior. Let me pull the perspective just a little bit higher to go back to prior crash events using the S&P. So on the time axis, let's take it back 5 years and just look and compare what happened here in immediate bounces. From 2018, this is your comparison at least, with a bounce, call that an up, down, up, and then a retest of the low, meaning this was not the top of the market. The argument or the thought process, or at least how we can frame this out, might be that we are here, up, down, up, one more up, I guess, in the market here, and then we retested the low. That's 2018. Down, up, and a couple of sessions in this, and maybe we retest the low. And for the SPY or the SPX, that's about 220 per share SPY. The same would be true in the other indices. In the Nasdaq, that was the weakest of today's performers, and that was a sell swing down just shy of 9,000. So those are the market levels to watch as we go forward. In the Dow futures, as we look at that, it's just shy of 24,000 in the Dow, and the Russell, which remains the weakest, it is just shy of 1,300. So these are just simple levels to watch as you plan departure swings or sell premium, or not sell premium, but purchase premium will be put plays to the downside. Of course, if the market does break above these levels, we'll start to open up bullish pathways again. But I think the main play for the short term this week and maybe the next, as we get more earnings, is the downside. Moving on, well, look at crude oil only from an interesting standpoint. I don't think there's really much you can do as intraday or short-term traders, given how the contract is operating and how funds, some of them at least, are blowing up. Margin calls are being affected, and this is kind of a big level, not level, but a big market to stay away from unless you are very, very, very experienced in trading some very, very short-term plays. Crude oil is dominating the headlines, and that makes sense. It wasn't that long ago that crude was into the $60 and $55 per barrel level. In 2019, it's collapsed it to new lows. And if you think this is what the stock market should be doing, I'm with you. I understand. If you shut the economy down, demand for crude oil evaporates. If we're talking about planes and transportation, travel, going to work, if a lot of global citizens, not just in America, but around the world, are staying home under lockdown. They're not driving their cars to the office or anything else like that. So it's just a direct play that the crude oil, gasoline is not needed for those type of events, and the price is going to fall. Well, why hasn't the market done that? If the economy is already in recession, well, that makes sense. I mean, that's the Federal Reserve, but that's for another video for another day. Let's switch perspectives and now pull back to this intraday chart and do a comparison on what's happening with earnings. So you'll see that Lockheed Martin had earnings. I'm not going to discuss the levels or what actually happened with those, but Lockheed Martin reported earnings pre-market. And the way we can tell that, I can sort of show you this, is a watch list, and it happens to have the days until earnings column. That can be a scan. You can save that for a scan, or other ways to find out which stocks are reporting earnings. If it says 0, 0.0, that means it reported before the bell, before the market opened. And again, you see that with Lockheed Martin. If it reports 0.5, that means it reported after market hours, and we'll see how that played out in a moment. But that's just a watch list on the left side panel. Coca-Cola did as well. Let me actually pull to a 5-minute chart. And from that, you can see how the daily chart, not that dissimilar from the S&P, that's a sell swing up against the 50 exponential, but also the 50 print for Coca-Cola shares. And earnings played into that. Philip Morris had a trend day to the downside today, was discussed in the main session, and a candidate for the sell side for intraday trades. And that led to a trend day down off of earnings overnight. And then Emerson, which is, we're looking at S&P 100 names, by the way. And these may not be names you trade, but they are names that reported earnings. And we'll get to a familiar name next. So nothing much in Emerson. You can see similar patterns in a down, up, and possible down sell swing. Netflix had earnings, had an earnings conference call, and everything else like that. It's just showing you these information panels on your watch list. Netflix is one of our stocks, like Amazon, that keeps making higher highs, keeps making 52-week highs, and presses to the upside. Its earnings, again, we'll discuss this tomorrow, led the stock surging to 485 and then coming right back to earth. Don's right. We're not going to look too much into earnings butterflies or earnings reports, just volatility and some other components. But just to note that these stocks did have earnings, and you might want to play some intraday positions, or now that they have had earnings behind them, you can look at in-out spreads or vertical spreads or any type of trade that you might not want to do directly before a stock reports earnings. So these are in the clear, if you will. So we can look at that in tomorrow's and the rest of the week session. And then Texas Instruments had a downtrend day today, and you're seeing the same thing with respect to mini stocks. A big sell-off into March, 1, 2, 3, or ABC, or down, up, down, a little retracement, and we're going to be monitoring what happens next. The thought process is that we go ahead and retest the lows, so Texas Instruments does allow us and other stocks to play bearishly with puts, put spreads, or different type of intraday strategies. That was a trendy candidate again today, and earnings have been reported, and we're seeing the market, or at least Texas Instruments, surge a little bit higher. So what we're looking at on the right side of the chart, all we're doing differently is, again, if you want to put this similar chart grid or setup, it's a watch list with days until earnings displaying here. The 1-minute chart or the 5-minute chart takes into account overnight activity. That way you can see what happened. And the daily chart does not. It allows you to see what the price levels are, support, resistance, and different levels or trend lines or things that you might watch independently. Given that Texas Instruments is trading down, it closed about 107 per share. We may open up at 109 or higher. So just keeping in mind the earnings announcement, earnings plays, and being a little bit cautious on this particular earnings session because there are so many uncertainties with the recession, if recession, unemployment, jobless, and the, of course, shutdown and the coronavirus. So there's just a lot of uncertainty. There will be future earnings sessions that will be a little clearer. Volatility, in-out spreads, and butterflies will work a little bit better. But we're all trying to figure this out at the same time. So if you are positioning, Focus on risk control. Don't be upset if something does not go as expected or planned. Maybe pick up next earnings season or next other opportunities for these type of trades. As always, be careful and safe. This is Corey Rosenblum with your Theo Nightly Video for April 21st, 2020.